Welcome back to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino, and today I'm joined by an excellent guest, Mr. Charles Wessel. Did I pronounce that last name correctly?
It's Wessel, but yeah,
Wessel.
Wessel, Weasel, Wessel. I get called all kinds of stuff. It's all good.
Excellent. So, for those of you that don't know, Charles been the founder of Cordell Capital and has been involved in multifamily and commercial real estate since 2006. So you are an experienced commercial real estate investor and syndicator. So welcome to the show. I'm excited to talk about real estate.
Yeah, man. Yeah, I'm pretty experienced. We've seen the ups and downs and ins and outs, and it's been crazy.
So I think what we wanted to talk today about was going from stocks to real estate investing. So I guess before we get into stocks, I guess kind of talk a little bit more about your background and how you got into real estate, and then we'll get into stocks.
Yeah, for sure. Yeah, I'm a recovering contractor. I was a general contractor for years and years and sold that business back in 2016, which is really when I really dove into the world of real estate investing. After getting my butt whipped in the stock market several times. But yeah, so we had some rental homes and that was a complete nightmare. So I talked to one of my buddies who's a pretty big time broker here in Charleston, South Carolina, where I live. And he said, man, safest bet out there is like commercial real estate. The safest one out there would be multifamily. He's like, everybody needs a place to live. He said it returns really good money in recessions and not recessions. And, returns are good enough that a lot of people will want to invest with. I took that to heart. First opportunity I had to go out, member of the country club and everything here in Charleston. And, I went out and I was like, man, I can go raise $1 million pretty easy, Yeah, that didn't happen. That didn't happen. Everybody's like, dude, you're a contractor. What are you talking about? I'm going to give you my retirement money I've worked my whole life for. So, anyways, I've just been pounding the pavement ever since, and it's grown. And it's just one of those things. Stick with it, and it'll happen.
It's interesting that the first thing that he said to you was the word safe. It's a safe investment.
Absolutely.
And it's interesting that he said that, because usually when people start talking about real estate investing, the first thing that gets people excited is the upside, as opposed to being a safe, tangible investment.
Correct. Yeah, it's safe and it's got a pretty decent upside.
Right.
Which we really like.
So I guess talk about your experience in stocks.
Oh man, when I was in my early 20s, I had a Scottrade account. My father was always super successful in investing his own money. He had a self-directed IRA before it was cool. He had one before anybody knew what that was. So he was always controlling his money, and he would set aside, 2-3 hours a day just to work on his portfolio. He wasn't a day trader, but he wasn't far from it either. I remember one time we went on vacation down to the beach, and he just stopped and bought a boat and showed up to the beach. We were in our early 20s at this point, and so we drove separately. He shows up to the beach house with a boat behind the truck, and I was like, where did you get that? He goes, I stopped and bought it. I was like, what are you talking about? You stopped and bought it? He's like, yeah. He said, I had a really good last week in the market. He said, so with everything I made, I just stopped and bought this boat. It just blew my mind. I was like, oh my God. You didn't, because he had a really good job. He ran a pretty large company in Raleigh, North Carolina for 30 years almost. And so he did really well. But he said that he bought this boat with his earnings from what he made in the stock market the week before.
Wow.
It just blew my mind. I was like, oh my God, Pop, you got to teach me what you're doing here, you know? And so he did, but he's always been signed into all these different, you know, I mean, he paid for coaching and stuff like that.
Wow.
Stuff that everybody needs to do. If you're going to get serious about something, you need a coach. I have a coach. Jeremy, I'm sure you have a coach. Yeah, it just makes sense. So I was blown away by it, but also, you know, I had like 20 grand saved up in retirement and stuff. And by the time I was 23, I think 23 or 24, and I lost like over half of it within a matter of like 2.5 months. And I was so pissed. I was like, dude, Dad, I don't know what you're doing. He's like, no, I lost money too. He's like, hey man, it's kind of how it goes. I was like, this is just legal gambling. That's all this is. I mean, we are just rolling the dice.
Right.
With all the research that we did on the companies that we invested in. Right. And we did a lot of research.
Right.
And I mean, this was in early 2000s, you know. I was done. I was like, okay, I'm not doing this anymore. I just lost like over half of my, you know, what I'd put aside since I began working. And it just popped my bubble for sure. And I just started sticking it in the 401k and just leaving it alone.
Oh, so you still kept some in the 401k though?
No, I had to. I didn't know what else to do. He wasn't investing in real estate. He was just, you know, he was playing the stock market every day. And I just couldn't do it. I mean, it was all I thought about. Like I'm checking, you know, the computer because back then we didn't have it on our phones. So I'm checking the computer, you know, at work. I constantly have it pulled up just in the background, and I'm opening it every couple hours. It's driving me crazy.
Yeah.
And yeah, so I knew at that point, I was like, well, I don't need to be a stockbroker anytime soon. But here, come to find out, they all lose everybody's money as well. So it's, you know.
What's nuts is that no matter how much research and study you do on a company, that's irrelevant to whether or not you're going to make a profit or not. The company's performance is irrelevant if the price of the stock goes up or down. It's two different things.
Yeah, it's totally a roll of the dice. Yeah. And I'm 45 years old and I have zero money in the stock market. None. I have no money in the stock market. I pulled all that money out years ago. And now it's invested in real estate.
Yeah.
And in business. I have some businesses as well that I own.
You're a lot quicker than I am. I've been investing in real estate since 2005. Mm-hmm. And just last December, I finally got rid of all of my 401k, everything. I got a solo 401k and rolled that over to solo 401k and invested and diversified in different real estate syndication projects. So it wasn't till now that I finally, for some reason, it just has a hold on you. You're not a good American unless you have your 401k diversified across all these different mutual funds. Like it's hard to part.
Yeah, it's the herd mentality. It's what we've been taught.
Yeah.
It's what our parents and our grandparents have been taught, you know, since the before the Great Depression was, you know, I think they set up the 401k thing or, you know, IRAs and all the government protected ways to invest. I think it was either shortly after the Great Depression or before. I don't know. You'd think that we learned our lesson, but yeah, it's tough to break that mentality because it's weird, man. Right. You know, it's being weird. We're not normal,
Right.
which is good. I mean, rich people don't teach it, the
Right.
super wealthy, they don't teach their children that. They teach them to invest in real estate, things that are, going to grow exponentially over time, not something that might grow. It
Right.
might, you know, or it's going to grow. It's just going to go like this the whole time
Right.
and scare the pants off of you because we work really hard for this money.
Right.
I mean, there's a lot of blood, sweat, and tears from every human being that goes into their retirement.
Right. And then you add on to your extra sweat and tears and effort into researching those companies, those stocks. So you're doing all this
100%.
research, and you finally figure out the companies that are having profitable years. I mean, Amazon and Google, Apple, they're profiting billions of dollars, but the stock price goes down, and then you lose all your money,
Right.
independent of them making billions of dollars and not them sharing that with their owners.
I know. Yeah, I have a meeting tomorrow with an investment advisor, a registered investment advisor here in Charleston. He manages a lot of people's money. He's got a lot of money, and I played golf with him last week, and he's like, "Yeah, man, I just keep buying Amazon and Google, like you just said." He's like, "I just keep buying Amazon and Google. Can't go wrong." I was like, "Well, you could be a whole lot more right." I mean, you get a fee no matter what he's investing it in. So whether they lose money or make money,
Right.
on our part,
Right.
I mean, our promote actually, our money depends on us making money on these deals.
Exactly.
So they're run more like a business that we have a little control. We have control over.
Right.
And for people that have run successful companies in the past, I mean, that's, look, man, we do a lot of due diligence on the guys that we bring capital to.
Right.
We even have a lawyer do background checks. Now, if they're in their 40s and they had a DUI in their 20s, well, who didn't? So, yeah. But, just to check, make sure there's no fraudulent anything or anything like that in their past. So we do a lot of due diligence on this stuff and make sure that these guys can run a business.
Right. What makes sense to me is getting pro rata, getting an actual rate for the performance of the profits of an investment. So the real estate investment fund or multifamily property generates a certain amount of income per year, and the owners need to get that back. And that makes sense to me. Whereas in the stock market, all I'm basing on, or all I'm hoping on, is that there's some sort of sentiment or excitement in the market, and then the price goes up, and then I'm able to sell, and it just doesn't make sense.
Yeah, and we can't inflate our prices.
Right.
like I mean, they base those stock prices off projections. I mean, it's
right.
Yeah, no, we can't. Our bottom line is what it is.
Right. So what are you working on now, and what kind of plans do you have for the future?
Well, we've been in nothing but multifamily since 2016, and that's just over $100 million worth of assets.
Wow.
Now we are going to focus on this year on broadening those, our opportunities into other alternative asset classes.
Excellent.
I think I saw one of your posts on LinkedIn and Facebook had like a pyramid or something about alternative assets. Yeah, I mean that was brilliant. That was a great post. But yeah, so we're looking into. We have a deal coming out next week on it's a motel in Lake Tahoe.
Wow.
That this will be the 4th or 5th project that these guys have bought and turned into short-term rentals.
Wow.
And the town of Lake Tahoe loves this guy. I mean, he's taken these motels and really turning them around, and each room is a specific themed room, and it's really really cool what these guys are doing. So we're looking at a couple of different short term rental opportunities. Like I know you have a short term rental fund right now,
Right.
that the returns on these things are really good.
The debt to service coverage ratio, we're at a 3 right now.
Oh, it's just incredible. It's just incredible. Apartments, you look for a 1.2.
Right.
And, debt service coverage ratio, which that means, for anybody that doesn't know, that means, what your actual mortgage payment is on what you're bringing in,
right.
Money wise, like you bringing in 3 times the amount of that payment if you have a 3 multiple on the debt service coverage ratio. But so we're excited about some short-term rental opportunities. We have some more multifamily opportunities that are in the works right now, and looking at a couple of oil and gas things.
Oh, nice
that are out there. So we hope to spread it out this year and really get super diversified in the alternative asset class.
Excellent.
Which I don't know why they call these alternative assets. I mean, really, real estate's been around since some caveman was, taking some meat for the cave next door. I mean, it's like, this isn't alternative assets. Stock market's alternative asset.
Right.
That's the newest thing going around.
Right. It's a mindset change. Exactly.
It really is, man.
Yeah.
It really is.
Excellent. So what do you have? Any last words for our listeners? Any advice to investors that are sitting on a nice 401k IRA that, they just don't want to leave the stock market? I get final words from Charlie.
Get out of the herd, get your head out of your behind, and call Jeremy and get into his short-term rental.
There you go.
Because I mean, it's just, it's a safe bet. It's got great returns. You get tax benefits. There's just so many great things with investing in real estate that you don't have investing in the stock market.
Exactly. Excellent. So where can the listeners find Charlie at and the viewers find you at?
CordellCapital.com. That's CORDELL capital.com. It's my grandmother's name.
All right.
Her name was Cordell. She lived like a pauper her whole life, and when she passed away, she left her family much money. So that's how we want to run our business. Is very conservative. But yeah, it's CordellCapital.com.
Excellent. Well, that's a wrap for this latest episode of the Wealth Building Strategies podcast. Charlie, thanks for coming on, and hopefully we'll have you on next time to talk about. I want to hear all the different diversified asset classes that you're into. So hopefully we have you on. I'll have you on soon.
Yeah, for sure, Jeremy. Thank you so much, man. It's been fun.
All right, talk to you later.